Ladies and gentlemen, welcome to a new episode of the Fintech Hunting podcast. We have a very special episode for you today. We're coming live from Nashville, Tennessee at the MBA Annual Conference. We don't have one, we have two amazing guests. Our first one is a serial entrepreneur. He's got a wealth of mortgage knowledge and expertise. Buck Collins, welcome to the podcast.
Yeah, thank you so much for having me. I really appreciate it.
It is great to have you. And then we have a regular from the podcast. He actually helped create the name of Fintech Hunting podcast. He is frequently on the show. He's one of the most listened to episodes. Please help me welcome Eric Kujala. Eric, it's great to have you here at the show.
Thanks, Mike. I appreciate it, man. It's always fun.
It is always fun. We have a great time. It's great to be here in Nashville. But more importantly, there's a ton going on in the industry, right? So before we dive into what you guys do, Eric, how you guys are partnering together, let's talk a little bit about market conditions, some of the impressions, some of the things you're hearing from people here at the MBA conference, and then we'll dive even deeper. Buck, why don't we start with you?
Yeah, absolutely. I think kind of the flavor du jour is all around the compression of the pipeline, right? And people dealing with whatever product type it would be, having somewhere between 20 to 50% down year-over-year volumes, which is very difficult. And so people, I think, are really trying to figure out ways in which to maximize that type of environment for their organizations.
Couldn't agree more. Eric, what are some of your observations?
No, I mean, the same thing. I mean, just double click down a little bit into it. HELOC's obviously a big one. There's a little bit of movement there, but that's obviously how you augment your pipeline. It's how you attract those borrowers that you may not have had before and kind of expand what you're trying to offer, to that borrower community. But, but still it's tough. It's tough. It's people are still a little bit hesitant to tap into that equity, but it's starting to grow. But that's definitely a thing that's getting a lot of traction, especially here at MBA. So
and the ARM, all of a sudden, the ARM is the product du jour.
That's right.
Yeah.
That's right.
Well, you're going to see ARMs. You're going to see some more exotics, 3-2-1 buy downs.
Yep.
I think at least some of my initial perceptions of what's going on is you've got to take a step back and historically look at it. We're still going to close over $2 trillion worth of loans. Right. Yeah. There is still a lot of business there. I think where people are struggling, and Jonathan Core, former CEO of Ellie Mae, used to say this all the time, the mortgage industry has a propensity for using human spackle. Mm-hmm. When there's tons of volumes, throw a lot of people at it. Mm-hmm. When things slow up, then unfortunately you see a lot of cuts. And I'm hoping as we talk about technology on the show, what are some of the ways that we can kind of stabilize that and use technology to leverage that huge roller coaster and avoid some of those dips? So, Buck, let's start talking a little bit, dive a little bit deeper. First, tell our audience, who are you with? What are you guys doing? You're the CEO, you're a co-founder. Give us a little bit of your background first, and then we'll get into the partnership and everything else. You have a great background. We were talking about that a little bit before we started.
We might actually have to have beers after this.
Yeah.
Maybe not right now, because it's 9 o'clock in the morning.
I'm not here to judge. I have an incredibly unorthodox background. I didn't start my career in mortgage. I was actually a retired professional ballet dancer. And I was recruited out of American Ballet Theater to come over to the mortgage space by a market pioneer named Lou Ranieri. And very, very grateful for him identifying me as talent and pulling me over, and which really giving me an education that is pretty unparalleled, right? Very, very blessed from that perspective. And from 2006 to 2020, I had the ability to work with Lou. And just seeing all of the market conditions that happened, going from a roaring market to an absolute trough in the Great Recession, and then coming out of there, how we were building back in challenging rate environments. Specifically, when you're dealing with treasuries that basically are a point, right, and lending off of that and trying to, and I think that's the biggest problem right now with what we're doing is, we're trying to create an economy. We're trying to orient ourselves off of a historic of 10 years, which is really not what has been typical in terms of our lending standards, right?
That's right.
Between quantitative easing, in terms of all the treasury buying and buying of mortgage-backed securities, you really had this artificial environment. And so now I think, to your point, now we're tampering all of that, and now we're coming into this new market, as well as with the pandemic of the previous 2 years, a lot of that product was stripped out in a very contracted period of time. So from a background perspective, it was great to really kind of see all that, next to one of the titans of the industry, and really have that firsthand view. And what gave me a real good view into seeing kind of all of the deficiencies with being an investor from a post-close perspective, right?
Yep.
Your hardest abilities in which to get data. And understand what data is true and what data is not true. Most likely, it's not true, and so then you have to,
Whether it be malicious or not.
Right. So you just become like Agatha Christie here, and what is and what is not, right? And to your point, no matter if you're an originator or if you're a servicer or you're an investor, you scale up in which to try to tackle these market issues, right? And so what we're doing here at Plus is that we decided to create this this asset management platform for the market in which to be able to aggregate their data, be able to true up their data, and be able to transact in a much less frictionless environment. So that's what Plus is, yeah.
And it's Plus Platform.
Yeah, Plus Platform, founded in 2020. And we did a lot of wood chopping, and then we did our first build, and our initial release came out this past August, and we were very fortunate to be identified by ICE and invited to become a partner.
Yeah.
So, yeah.
Excellent.
That was recently launched.
Yeah.
So Eric, let's talk a little bit about that. Everyone knows your background. You're a thought leader. You're a great networker. You've been in the industry for a long time, tech evangelist. So I don't have to go on and on about that. So talk to us about why is this partnership important, and what are some of the key elements of this partnership?
Well, I mean, the big thing is just from a strategy perspective that ICE has. It's like, and I'm going to say something that's a little bit controversial. Hopefully not a lot of my colleagues will hear this, but we do a lot of things, right? But people may not like everything that we do, right? And there's a requirement out there, and our customers drive it out to have partners like us to kind of plug into that help round out kind of the entire experience, right? Because there's expertise there, right? I mean, I could sit here and try and talk, but I can't do it, right?
You've made that very clear.
I've made that. That's very, very clear, right? But we need to have those kinds of relationships so that we can round out the entire experience, right? Because there is a lot of deficiencies in it, right? I mean, I was on the origination side, I was on the retail side, so my glimpse into that secondary capital markets area was from afar, right? I mean, I knew how to rate locks worked. I was originator during 2007 in July when I was watching my rate locks go from 30 days to 75 days and blowing locks like crazy.
Yeah.
It wasn't a lot of fun. But that was like my exposure to it at the time. And now, forming partnerships like Plus is helps us round out the entire experience, because that's what customers want. They want options, and they want kind of best of breed type technology. So that's why we're excited to do it. So
outstanding. So let's start talking, let's dive a little bit deeper into some of the topics. So we look at post-closing. What are some of the lifts? What are some of the areas on the origination side when we talk post-closing that you guys can help, and this partnership can help further the cause?
Yeah, absolutely. One of the places that Encompass and Plus comes together beautifully on is the ability to work together to transfer the data in its totality with all of the docs as well as the standard data sets, the MISMO 3.4, the ULDD, the UCD, being able to grab all of those data and docs, be able to port it over to that post-close environment and to be able to keep them together. Today, the industry basically takes all this beautiful data out of Encompass and pushes it right into Excel sheets and then tries to proactively manage it from there. But the big problem is that you have these incredible platforms, but you also have human error in those incredible platforms, right? So what we can do together in our relationship is be able to take all of that data from Encompass in that perfect state and be able to run a quality control process around it and be able to flag manufacturing errors, the fat finger, right, that comes out downstream. And being able to identify those is fantastic for the originator. Not only does it really mitigate their legal risk in a downstream effect, but additionally, when you're able to produce cleaner docs and sell them out to the market, you reduce the friction around it. So hence, you as an originator will be by definition getting premiums.
Yeah.
Eric, anything you want to add on that front?
Yeah, I mean, so obviously I came from the capstone side of things, so the data thing is very interesting for me personally. But we used to have this concept called automation quality data, right? And to your point, right, there's sources coming. It's all look at it from the origination side, right? There's data comes in all kinds of forms and sizes, right? It comes in off of an image. It comes in off of a different service that you're related to. It comes in off of me talking to somebody, typing it into the LOS, whatever, and that automation quality data has been difficult to get to because there's so many sources, and trying to standardize and rationalize it is a key component. Once you do that and harness that, that's what drives the automation piece. Because if you just pump data in, to your point, all you're doing is making a bad process worse. Potentially.
Exactly.
So you have to kind of perfect that data and get it to that automation quality state, which then drives kind of the engines on the other side. So that's a big part. Again, why we're kind of partnering as well, because the data is only as good as it comes in. and you have to have somebody there to either review it or whatever. And if you can automate those cases and get to that automation quality, that's where you start driving.
And the last thing you want to do is when you finally have that data on the origination side, then to parse it out and throw it into spreadsheets.
Yep.
Yeah.
Kind of start that whole process again.
Yeah.
So if you can have that platform and it's
That's right.
automated and that clean data is seamlessly flowing through, now you have much higher loan quality and a much better product for the market and the investor base.
Absolutely. One of the biggest problems in the post-close world is data and file degradation, right? And you're looking at your initial transfers, you have massive losses, not massive losses, but we'll say like essentially a 6 to 10% loss can occur at that point. But we're talking to friends in the industries that are dealing with downstream when you're about 3 years out, and their degradation rates are in the low 20s, right? That's a lot of data and docs that you're missing, right?
Absolutely.
And when you think about all the interactions that happen on a loan and the absolute need in which to be able to aggregate them and to keep together and to port throughout the term of the loan all of this information, when you're selling this risk downstream, you're mitigating so much legal risk for yourself, being able to show all the math of all the decisioning that's happened upstream, right? And it's very important in this world we live in today.
Yeah, I think it's also important that, you make a good point. Like, it's one thing to go and purchase that loan as a correspondent investor, right? It's another thing to carry the life of that loan and the things that happen, because people kind of forget, like, things can also happen after closing. And they mostly do.
Mortgages like this is people are very focused on the front end of it, which
That's
they
right.
should be in terms of the quality of the product.
Right.
But it's like having a baby, right? And so you're pregnant, you give birth, and then mortgage today is kind of like, let's take this baby and put it out in the woods and let it become feral. We're saying, well, maybe you should.
Maybe we shouldn't do that.
Maybe you should take
Probably
it to the
not
doctor,
really a good idea there.
or send it to school a bit, and make sure that it goes. Let's say, maybe not the 30 years, but a good 22.
That's right.
So it's very important, right? I mean, it's we live in a world today where we have so much advance in technology that we can really now really for the first time, the biggest driver is cloud computing, right? Making that processing power and that continuity for development so much faster and bigger really allows a lot more participants to come into the market and really be part of the conversation.
Yeah.
So
Now let's switch gears a little.
Sure.
And we're talking about going downstream. Let's talk about what are some of the lifts, what are some of the advantages when you get to the whole loan investor, when you get to the servicing side of it.
Oh, I mean, so one of the core tenets of Plus is we are a singular instance of the loan. So all market participants that sit around that loan, whether you're the primary position or you're a vendor that sits around it, all is working into a singular instance of it. So you now do not need to worry about data versioning. Was it use this one? No, this is the final. No, final. I mean, we've all come across those Excel sheets, right?
That's right.
So having that singular place where you can permission people in to see components of it, right? Instead of doing, I need to carve this out of my data warehouse. I need to send it downstream. They need to send that back to me. And what version was that, right? And we're really eliminating that. We're creating a centralized place for the investor to basically aggregate all of their vendors into. So we're saying no more going out into all of the platforms that have to sit around you just because there was no other core platform at the time. We're just reversing that workflow.
Excellent. Eric, anything you want to add on that front?
No, I mean, it's touching the entire experience, right? For a long time, Ellie Mae's always been on kind of the front end of the experience, right?
Right.
So now as we bring in Simple File and MERS into the fold, we're starting to expand that portfolio and that reach into those areas, and partnerships like this is key to rounding out that entire experience. I mean, the days of the spreadsheet are hopefully gone. I don't.
Right.
It may not happen right away, but
Yeah.
it's definitely going to chip away.
And you talk about fat fingers on
Yeah.
a loan
Yeah,
file
yeah.
and Excel spreadsheets. I
Yeah.
found it's 10 times worse.
Or people falling down on their duties, right? When you talk
Right.
about MERS, right?
Yeah.
Pre-crisis, crisis of 2008, people weren't exactly on the ball in the way that they should have been in terms of reporting to MERS. And we really kind of corrected that post that crisis from 2012 forward. But this last spring, we saw that people were starting to fall down again. So here at Plus, what we're doing is you're creating that ability to have automatic reporting go up to MERS. So therefore, MERS is always in sync with the loan, and the loan is always in sync with MERS. I think is very important for the economy, right? Really to that point, really create that cohesiveness
That's right.
with all the platforms.
That transparency that the market requires.
Absolutely,
Yeah.
absolutely.
For sure.
Well, and you have then a much more valuable portfolio if people understand the quality of it all the way through the process.
Absolutely. Sorry. Go ahead.
No, good.
No, and then being able to take all of that data and then be able to assume more data to
That's
it,
right.
To be even further validated, right?
That's
To
right.
understand, the borrower is, trending up, they're trending down. Do you need to get in there to help them, right? No one wants to see someone go into default, right? So if you can get in there with a forbearance program or a mod and say, hey, listen, I'll extend you out by 3 or 6 months, right, to the term of the loan, versus having you fall down. You as an investor from a selfish standpoint want that because you're a performing loan, right?
Yep.
That's right.
Right, and then
You're
also
not paper, not.
yeah, but at the end of the day, you have to remember mortgages are people. Right?
That's right.
They're families, right? They're
Exactly.
people that get up every morning, and you really we have to do the best for them because they do, the majority of them do the best for us.
Yeah, I think it's funny because I think I'm going to get way over my skis here.
Yeah.
I mean, you get a 2.5% mortgage. The propensity to refinance is that. So that servicing portfolio is a lot stickier. So these types of automation, the quality in there, like that performing loan portfolio has to be very, very consistent. It's probably not going to go, much farther than where it is today. You'll get churn. People have life-changing events, and they'll buy new houses, whatever the cases. But it's going to be a fairly sticky servicing portfolio, well into the future. So.
100%. I could not agree more. In terms of the rate environment of today, I mean, from a refi perspective, from a HELOC perspective, it's I think the American consumer, we're looking at very interesting times right now. That's a Chinese curse. I mean, really interesting times. Yeah. And right now, it really is this place where the American consumer, I think Michael Burry, I don't know if that's a citable source, but I'm going to cite him, right? We saved as a population $6.5 trillion during the pandemic. And from that $6.5 trillion, we have something like $580 billion left from the American consumer standpoint. We are at 2008 levels in terms of savings, right?
Wow.
So it goes back to that Capital One commercial, what's in your wallet,
Yep.
right?
Yeah.
And we can talk about these macro events and how we can change it from Washington or New York, right? But the truth of it is it's a hyper-local level, right? And it really is, what can you afford? And when someone's in a 2.5% or a 3% mortgage, switching that up to a 7 is not something that's definitely it's not appetizing to them.
Absolutely.
Yeah, for sure.
Well, you guys have a wealth of knowledge. We could sit here and talk for hours on end. I know we're here at the MBA. There's a lot of meetings, a lot of other appointments. If somebody wants to find out more, what's the best way they can get a hold of you?
Yeah, absolutely. Go to plusplatform.io, and there you can get a demo. You can contact us, and we'd love to hear from you.
Eric, what's the best way of people to get a hold of you here at MBA? I don't know if you want to put a
Visit the
plug
booth.
in for experience.
Yeah, we've got, number one, we got the booth here at MBA. You can't miss it. It's got a big, giant, nice logo over the top of it. And then we're definitely in the throes of experience planning for 23. So it's February 28th to March 1st or 2nd. So
We'll see you there.
yeah, hey, I hope so. It's gonna be a good one. It's a lot of work, but it's gonna be a really good event. So
We are looking forward to that. I can't thank the two of you enough. Thank you so much for being guests on this episode of the Fintech Hunting Podcast.
cool.